In the last few days, you may have seen the internet explode with news about GameStop's stock prices and a war brewing between Redditors and Wall Street. The very short version is a bunch of Redditors banded together to take on Wall Street, and it's a post David and Goliath story where internet trolls hyper-inflated GameStop's market value and cost some very rich investors billions of dollars. So let's start at the beginning. GameStop has been a dying business for a while now. In a time where digital game sales are up, discless consoles are becoming more popular, and a global pandemic is shutting down businesses, brick-and-mortar game stores like GameStop's are very quickly becoming irrelevant. Even before the COVID-19 pandemic, GameStop was already going under. They'd lost $1.6 billion over the last 3 years, their stock price has been steadily dropping for the last 6 years, and the company currently has over $500 million in debt. So when a company as big as GameStop is dying like this, it attracts vultures. And the vultures in this scenario are investment groups betting on GameStop's failure. As long as GameStop continues to die, the investment groups make money using a process called shorting. Shorting stock is when you borrow shares of a company and sell them with the intention of buying them back later for a cheaper price after their value has gone down even further. That's called opening a short. The original borrower is obligated to return the stocks that they borrowed after a certain period of time, and if they manage to buy them back cheaper than what they borrowed against before then, they make a profit when they close the short. In this case, investment groups saw GameStop was failing and bought into it, counting on it to continue failing. As long as GameStop's value trends down, they profit. And this is where Reddit enters the picture. There's a very popular subreddit called Wall Street Bets that's known for pretty questionable investment advice and ironic post memes. The community literally describes themselves as like 4chan found a Bloomberg terminal. A few months ago, members of Wall Street Bets started buying up shares in GameStop as more or less a joke. There was this prediction floating around that investment firms are going to try to short millions of GameStop shares. So a bunch of Redditors noticed what Wall Street was planning and swooped in to seize leverage first. And this mass action led by the Wall Street Bets community had profound side effects. First, they bought enough to notably increase demand for GameStop stock, therefore increasing its value. Since the big-time investors and professionals on Wall Street didn't actually own the GameStop shares they sold, they would eventually have to buy them back at a higher price when their lenders came knocking to close all of the shorts. To complicate things further, if the big-time investors cut their losses and buy back GameStop stock en masse to close out the shorts, the evaluation of the stock will go up even further. This is because lots of stock being bought up increases perceived demand and value. At this point, the situation has just become wild, and hedge funds are being obliterated. At the time of this recording, GameStop short sellers, the big shots, they've lost over $5 billion while an army of Reddit, TikTok, and YouTube users are lining their pockets. Business Insider reported the spike in GameStop has led some hedge funds into trouble. Melvin Capital required a $2.75 billion cash infusion from Steve Cohen's .72, and Ken Griffin's Citadel helped it weather the losses from a short position. To translate that into English, these hedge funds that were betting on GameStop's failure have lost so much money because GameStop stock is not failing that they need emergency bailout cash from others to stay alive. To quote a tweet from Sean Purry, the YOLO traders of Reddit just broke a multi-billion-dollar hedge fund. To add further context, GameStop stock was around $4 back in August, compared to the time of this recording, where the stock price is around $339. I'm kind of worried about even including this part in the video because the stock price is fluctuating so violently that I honestly have no idea where it'll be at by the time you're watching this. But make no mistake, some of these Redditors are making bank. At least for now. One Wall Street Bets user named Deep Value posted a screenshot on the subreddit of $50,000 worth of GameStop shares he bought for less than $1 a share back in 2019. He has since put $700,000 into GameStop stock and turned that initial investment into $22 million. So we should note that Wall Street Bets alone wasn't the sole cause of this madness, although a big part, other factors have also been snowballing as well. The co-founder of Chewy, a recent stock market success story on their own, Ryan Cohen, has been installed as a GameStop board member, and that's given some investors legitimate hope that GameStop as a functioning company might actually be able to turn itself around. As for things going forward, this story is evolving rapidly, but as of right now, it appears a lot of professional investors are still anticipating GameStop's stock prices to fall drastically, while Redditors continue to hold the line and not sell their stocks. Eventually, things could flatten out when stockholders and Redditors decide to cash out, but in the meantime, GameStop's board of investors could potentially sell some of their now highly valued stocks and use that money to put back into the company, or just like pay off a huge chunk of all that debt the company accumulated over the last 6 years. Of course, when you have rich people losing a lot of money, you can bet that there will be a massive crackdown and movement to adjust legislature on the tactics that Wall Street elites they themselves have already been using for years. A professor at ASU's Walter Cronkite School of Journalism put it succinctly in a tweet thread. I'd summarize what's happening with GameStop, hedge funds, and a subreddit this way. Market manipulation has been democratized and crowdsourced. Wall Street is furious, since this is an attack on a domain they've largely owned. And of course, the immediate worry will be in the guaranteed overreactions from the officials whose alleged duty is to ensure what we have fair, functioning marketplaces for financial instruments. Keyword alleged. They will be forced to act. Governing bodies have already stepped in a number of times to halt the trading of GameStop stock due to its wild fluctuations in value. To be very clear, this story is not over yet. On Tuesday, Elon Musk posted a tweet hyping up the Wall Street Bets community, and their morale to hold the line is stronger than ever. So while this is kind of a snapshot of the story as of right now, there's definitely still more to come, and as a word of caution, if you're out there and you manage to buy up some GameStop stock, don't get caught holding the bag when everyone else does decide to sell, because that stock price could come down pretty fast. But hey, in the meantime, power to the players, I guess. Okay, so we wanted to record this quick update because, like we said, this story is certainly not over yet and continuing to evolve in real time. And this morning we learned that the app Robinhood, which a lot of people that we're talking about in this video use to buy and sell stock, has actually blocked their users from buying or trading stocks popular from this Reddit community, Wall Street Bets, like GameStop, AMC, BlackBerry. And obviously this is raising a ton of eyebrows because while general public users have been restricted, hedge funds are still able to freely trade stock as they see fit. So the White House is currently monitoring the situation. Politicians are tweeting out their takes. It's definitely still evolving and it's definitely turning into a giant mess, but it's something to keep an eye on. It was something we felt we needed to share with you guys to give you the most up-to-date story possible. Okay, thanks.